And disappointing news for those that were hoping for a stimulus, because the European Central Bank has announced that it will not expand its current stimulus program, despite the growing threat of deflation in the Eurozone and the bloc's ongoing economic stagnation. The bank's chief, Mario Draghi, also tried to downplay rumors of divisions among board members, saying that the decision to take stronger measures if needed was now unanimous. CCTV's Barton has the details from Brussels.
After its monthly board meeting, the European Central Bank announced its key lending rate would remain at its current record low, hovering just above zero. There was also no change to the ECB's current stimulus programs aimed at getting banks lending more money to households and businesses. Far stronger economy boosting measures adopted by other countries, such as large-scale purchases of government bonds, better known as quantitative easing, still appear distant in the Eurozone. That's mainly due to political resistance, particularly in Berlin, though the bank's chief Mario Draghi insisted quantitative easing is still an option.
There are two contingencies we'll look at. The first contingency is that our current measures aren't enough. And the second contingency is if our medium-term outlook for inflation expectations were to worsen. In these cases, the Governing Council is unanimous in its commitment to using additional unconventional instruments within its mandate.
It was a powerful message aimed at dispelling rumours swirling around the bank.
It's quite a clear message. During the last days, there was some rumors that there was some distension between Draghi and other governors and so on and so on. And so I think that today he clearly confirmed that there is one single line at the end, and the line is to say that they are ready to go further if needed.
In recent months, the ECB has cut rates, offered ultra-cheap money to banks and started purchasing bundles of their loans. The hope is this will boost recovery in the Eurozone after a debt crisis that led governments to cut spending, raise taxes and deal with growing public discontent. Even as the ECB board met, transport workers protesting against lower wages, longer hours and thousands of pending job cuts paralysed Belgium and Germany. The Eurozone experienced no growth in the second quarter, and few economists expect third quarter figures to be any better when they're released at the end of next week. Barton, CCTV, Brussels.